In our view, the emphasis is a bit too much on the competition that we provide to active fund managers, but in general we view us as very much complementary to their offering. Core satellite approach is something that comes to mind, where essentially a portfolio out of active and passive fund managers can be very suitable for individual investor needs. That is generally a question that people can debate for days and weeks, but in very short, I believe that us in the ETF industry, we have some great growth rates still ahead of us. It's tough to predict the exact growth over the next couple of years, but given a couple of recent developments in the UK and elsewhere in continental Europe, we believe that the retail market, as one of the missing patches in our client base, is about to be tapped, which should warrant some additional growth rates for the ETF industry in general. A couple of key points are that ETFs are funds. That means they're regulated investment vehicles, which generally encourages transparency and fair investor behavior. Also, to understand that generally ETFs are very cheap, which means for cost-conscious investors, they can be a suitable investment. In our view, a greater retail penetration of ETFs is a great opportunity for independent financial advisors and planners, because whilst the ETF is accessible to individual investors, each retail investor generally does still need advice in terms of what is a suitable product, what is a suitable exposure, and therefore IFAs should embrace ETFs as a great new opportunity to encourage their clients in new conversations and potentially open their doors to new cost-conscious investors as well.